The economy is in a state of disequilibrium. What does that even mean and what comes next? That's a couple of things that we're going to take a look at today. I got a couple of charts that I've had pulled up here I want to share with you. And then I want to open it up for discussion, something that I don't do very often. I did it recently and it seemed like it was a big hit. So I said, hey, if you like this and you click that like button a whole bunch of times, maybe I'll do them more often. And so that's exactly what happened. So I figured, hey, what the heck? Let's go live again. It certainly adds a little bit of a different energy for me. I enjoy going live with you. I love the interaction. So the economy is in disequilibrium. Well, equilibrium means that things are even, things are equal, things have a balance. Your ears produce an equilibrium for you. And if they go out of equilibrium, then you get dizzy and you fall over. And that's exactly what's happening with the markets. They've lost their balance and they are getting very dizzy and they're about to fall over. Now, we've seen this week record prints from the CPI or the CPI index, as I like to call it. Record prints, 8.5% from CPI. Highs we haven't seen in over about 42 years since the 1980s, which of course, well, two things about that. One, we've changed the CPI metrics, the way we calculate those baskets twice, big changes, once in the 80s, once in the 90s. If we would go back to the way we calculated CPI in the 80s, we'd have a way different number than 8.5%. The other thing that's important to understand is that was in the 80s was when we had crazy high inflation. As a matter of fact, we had such high inflation that then sitting board reserve president Paul Volcker had to take crazy, extraordinary actions and raise the interest rates or the rates over 20%. And so that's what we're comparing to. Those are the highs that we're at right now. It's pretty crazy. But that's not even the worst part. While they're gaslighting us, trying to tell us that inflation is coming down, another report came out today, the PPI. Maybe you guys don't watch that. And I'm going to explain what that PPI is, what it is, what it said. We're going to look at that. We're going to look at some of the causes for inflation. I want to talk about what it actually means to you. What that actually means to you, meaning hours of your life are being stolen. I'm going to break that down in some numbers. We're going to look at the real cause of inflation. We're going to look at some of the numbers of what the government's been telling us. And then, like I said, I'm going to go through this pretty quickly. And then we're going to sit here and I'm going to go live with you guys. I'm going to answer your questions in the chat. And I'm even going to do something else that I've never done before. And I'm pretty excited about it. We'll see how it goes. Cross my fingers. We've got this new system set up. I'm here in the new studio. If you guys have been watching my videos for a long period of time, you know that I've got this new studio. I'm trying lots of creative different things. Hopefully you guys are enjoying that. Always love to have your feedback. So feel free to drop me your comments and let me know what you think about the new studio and how we're using it. Like going over and using the whiteboard in some videos, sitting at this desk. I have this new monitor here that I can share stuff with. Pretty cool. So we're trying different things. I'd love to have your feedback on that. But we're going to do something different today that I've never done, where we're actually going to be able to bring some of you on live on video. We're going to try it out. Cross my fingers it worked. All right. So we got the chat coming up. Oh, I see private chat. Let's see. There we go. All right. I see lots of comments before I jump into this. We'll just say hi to some of you guys. I see Brett Green. There we go. Brett Green, Perito from Brazil, Rocky Mountains. Brett Green says, I'm going to tell it like it is. You're sure right I am. I'm always going to tell you what I wish I would have heard if I was on the other side of the table. All right. That's exactly what I'm going to do. What's up, Shiv? Plumber Stacker, All-Nighter Hider. Oh, what's up, Hider? Always with me. I appreciate the support, brother. Adi Gonzalez, Joey, collapse happening. Yeah, it's happening right now. It's kind of like if I just painted the wall, the old analogy, watching paint dry. So I painted the wall and we're watching it and you're like, when's the paint going to dry? It's like, well, it's drying. We're watching it. And so everybody wants to ask me, Mark, when's the market going to crash? When's the dollar going to collapse? When the dollar will lose its reserve status? And it's like, it's happening. We're witnessing that. Joey, Johnny Midas, what's up? What's up, Don? Always bringing the best content. I'm trying, Don, trying my best. Renee Montegro, colossal crash for Bitcoin in May. Yeah, it's so bad. It's all the way back to 40,000. Yeah, it's really bad. I'm not super worried about that. Paul Miller, love the new studio. Thanks, Paul. Appreciate that. Denise Klingman from Tulsa, Oklahoma. What's up, Denise? It's a pretty good area of the country. I like Oklahoma, some freedom-loving people over there. Gurdeep Singh. Hey, Gurdeep. Thanks for joining. All right, Robert Chu. All right. So let's go ahead and jump into this a little bit. I want to share my screen here. So I got the title for this video today from this headline, or from this article I saw here on Seeking Alpha. Inflation at 8.5%. Economy is in disequilibrium. So that's what I was talking about, kind of explaining that. Now, what you probably already know, I already talked about it on a video. Inflation for March came in at an annual rate of 8.5%, the highest rate in 41 years, which is what I said. But there's many other issues hiding under this number. So while this number looks bad, it's actually worse than what you may think. So we're going to talk about that. And it says, furthermore, the financial markets appear to be sitting on the edge. Sitting on the edge of what? The edge of a total collapse, as the Fed's former regress has spread throughout. What does that mean? The Fed's former regress, all the transgressions, mainly all those dollars, all the money they've printed over the last 2 years. And it's just now getting through the system, and it's causing a lot of problems. And it says here, we are in a period of radical uncertainty. Uncertainty, we call that FUD, fear, uncertainty, doubt, FUD, FUD. It's these periods of fear and uncertainty. Uncertainty causes fear. We don't know what comes next. Imagine if you were, in Ukraine right now, where there's war going on, and your home's getting bombed, and you got to grab a couple belongings, and you have to go, and you don't know where you're going. You don't know when you're going to get there. Life would be very uncertain for you, and it'd be very scary. A lot of fear. Well, we're also facing a period of radical uncertainty, as it says. Now, obviously, I don't want to compare that to living in Ukraine. I certainly don't know what that's like. But we're also sitting in this place where we don't know what comes next. Are home prices going to crash? Are the entire stock market's going to crash? Are we going to run out of food here in the United States? I mean, that's a real possibility that we have. So we have this radical uncertainty, and it says a period when we don't really know what many of the possible outcomes of our actions might produce. So there's a lot of different possible outcomes. So what does that mean? Unfortunately, for most people, probably none of you guys watching, but most people that I interact with on social media, I get thousands of comments a week across all my social media platforms, which if you're not following me on social media, you should. Check me out on Twitter and Instagram at @1markmoss, @1markmoss. Check out my website, onemarkmoss.com. But between YouTube and Twitter and Instagram, I see thousands of comments a week. And the one problem that I see most people have is they think very binary, as in things are black and white. The markets are going to crash. Bitcoin is going to zero. The markets are going higher. The Fed's going to print more money, or whatever it may be. Nothing in life is certain. We don't know that. And so it's not either or. It's not binary. It's not black or white. Everything is a possibility. And what we have to do is we have to understand what these possibilities are. And then we have to assign probabilities to each of those possibilities. And then we have to figure out how we're going to plan for those. Sort of like how the FBI does like a risk analysis. They look at, okay, here's all the different possible things that could happen. So for example, they're trying to prevent an attack, for example, right? Well, they could attack this event with a bomb, or they could come in with gunmen, or they could drive a vehicle through the crowd, right? So these are three possible attack vectors. In order for this to happen, then this would happen. But in order for this to happen, then this would happen. And so they kind of look at all these possible outcomes, and then they look at the steps that would have to happen for each of those possible outcomes to happen. So, for example, the markets are certainly going to crash. No government in history that's ever achieved this level of debt to GDP, 130%, or really over 90%, but 130%, no one ever comes out of that. And so there's going to be a crash. But there's two types of crashes. There's an inflationary crash, and that's where asset prices go so high, you still lose purchasing power. So at the end of the day, it's all about purchasing power. Can you afford to live, right? Can you afford to keep your standard of living? And so we can have an inflationary crash where food and energy and home prices go so high that we can't afford it. But we can also have a deflationary crash, a disinflationary crash, and that's where asset prices fall. So those are two big possible outcomes. Which one will we have? Well, if the Fed just goes crazy and blows up the markets, we'll have an inflationary crash. But what if they don't want to do that? What if they want to let the markets crash to save the dollar, to reset the system, to destroy the United States, any number of reasons? And then we could have a disinflationary crash. So those are two possible outcomes. So what would have to happen for each of those things to happen? So those are how we want to look at that. And back to this point that I'm sharing here, it says that we're in a period of radical uncertainty, a period when we don't really know what many of the possible outcomes of our actions might produce. And so I like that because it basically lays out exactly what I'm saying. We have many outcomes. So let's look at some of the numbers here a little bit, and I'll talk about some of these outcomes. And so here we have inflation surged 8.5% in March. Here's what Americans plan to cut as prices continue to rise. The very fact that they even have to say that we have to cut as prices continue to rise. So what does that mean? People are losing their standard of living. No more going out to eat with your family on Friday night. Sorry. No more driving to the beach on the weekends. Sorry. Like no vacation this year for your kids for a summer or whatever, right? And so now we're at this point where what are we going to cut because prices continue to rise? So our quality of life is going down. If we continue going down here, it says, which of the following, if any, will you consider doing if higher prices persist? And so 52%, half of people say they're going to cut back on dining out. That's a shame. It's a shame that your quality of life is going down. It's a shame if you're a restaurant owner. That means your business is probably going to suffer. It's a shame if you service restaurants, like if you deliver food to them, if you grow food for them, if you clean their uniforms and placemats, etc. Cut back on driving. Okay, cancel a trip or vacation. Cancel a monthly subscription. Switch to generic products. Delay buying a car 28%. Delay buying a home 20%. Borrow money or take on credit card debt to cover expenses. That's a really bad one. 16%. As a matter of fact, I talked about that here. I'm going to jump over to my Twitter feed. Again, if you're not following me on Twitter, you should. Here we are, one Mark Moss. I put this chart up earlier today right here. So talking about taking on debt. So look at this chart right here. What we have here is the consumer loans. These are credit cards and revolving plans. So there's I'm a Robert Kiyosaki disciple. He's one of my good friends now, as well as my mentor. Shout out to Robert. Good debt and bad debt. Good debt is money that I would take on this productive debt. I bought an apartment building. I took on debt for the apartment building, and now it pays me back money. I took on debt to buy a new equipment for my business that then pays me back. I invested into research and development, et cetera. That's good debt. Bad debt is consumable debt. I borrowed money for food. That's bad because once that food is eaten, then it's no good. So if you look at this chart I have up here on the screen, what we have right here is this consumer debt. And look at this rate of growth in the last 2 years. It kind of flatlined out right here. And this rate of growth right here, we've never seen like this before. It's hitting a 40-year high. Food is at a 40-year high, led by food and energy. And what we're seeing is consumer credit is climbing at an all-time pace. And this is how economies collapse, because loans should not be used for daily necessities. Going back to this article here, you can see right here, 20% say they're going to borrow money, credit card debt, to cover their expenses. So that's a big problem. But as bad as that is, they're still trying to tell us that, it's going to go away, right? At first, inflation wasn't a problem. Then it was transitory. Now they're telling us that it's temporary and it's going to be going down. We're probably at the peak. We're peak inflation, they tell us. Well, let's take a look at this right here. So here we have on my screen, we have here PPI hits a record high above 11%. Now, what the heck is PPI? What the heck is PPI? Well, it's a leading indicator that tells us what is going to happen. It tells us the wholesale prices. It's the producer price index. So they have to produce the products before you consume them. CPI is consumer price index. But before you consume them, you have to produce them. That's the PPI, producer price index. So imagine like a snake, and you have a rat moving through a snake's body. And so first you have the commodities. That's whoever's making the copper, the steel, digging the lithium out of the ground, right? That's the commodity. So first thing we want to do is look at commodity prices, which of course are at all-time highs. Let me open up this here. I didn't prepare this, but I'm thinking about it. So yeah, I'll pull up my screen here. So if we look at this, this is oil. I'm going to come back to that. I like to look at this chart right here, though. There we go, USCI. So this is a good fund, a commodity fund. And what we can see here is that we are at all-time highs. So this goes back a couple of years, April 20. And here we are. So this is commodities. So it starts with the commodities. as you can see on the chart on the screen, all-time highs. And so it starts with producing that commodity, and then it has to get to, has to get shipped. Then we have all the shipping supplies. Then it has to get to someone who manufactures those commodities and puts them into materials. And then it gets to the producers, and the producers have to assemble the parts, right? And then eventually it gets to you, the consumer, at the store. So it's like this snake, right? And so if we look at commodities spiking higher, we know that eventually higher prices will be at the consumer. And so back to this article here, this PPI, we're at 11%, well above a record. It says this suggests that inflation at consumer level is likely to get worse before it gets better. So what it's saying is the snake just ate that rat, and it's going to be a while before it works its way through that body and gets to us. So it's interesting to see. And then what I want to show you is I posted this on Twitter as well, which I thought was pretty interesting. While I have this on the screen, shout out. I just wrote a book, Uncommunist Manifesto. It's got a couple more days in Kickstarter. If you would like to support the book or at least check it out, go to uncommunist.com, uncommunist.com. We basically took the Communist Manifesto, kept the same basics of the book, 4 chapters, and flipped it upside down and just rewrote it. It's a perfect book to read so you can understand what Marxism and communism was, and you can have intelligent conversations. Buy 5 books, pass them out to friends and family. It's about an hour's read. It's very easy. Check it out at uncommunist.com. But back to where I was going right here. So the cost of inflation. So per Moody's, the average U.S. household spent an extra $327 in March due to inflation. $327. Now, let's say that if the average American worker earns $32 an hour, that means that they have to work 10 more hours, 10 additional hours in the month of March. That's more than an entire workday, just to offset, just to keep their same standard of living that they would have had without that. Now, if you make $20 an hour, then it's probably, 15 hours. That's almost 2 full days of work that you are going to have to make just to make up for the amount of inflation that we have. Now, a couple more things I want to show you, and then we're going to jump into some Q&A here. And then, like I said, I'm going to try and bring some of you guys on. I want to bring up this chart, which I'm sure many of you have seen many times. This is the money supply. You can see that this money supply just barely, gradually rose, slowly. It starts taking off. Right here in this gray area is 2008. That's when the Fed, and if we just jump forward to that area right here, if we zoom in on that, what's interesting, I'll pull this back a little bit. There we go. So you can see right here in 2008, this is where the great financial crash, where we printed over $1 trillion, the most amount of money in history. It was unbelievable how much money we printed. You can't even see it. It's like a little blip on the road because of what happens here, where we basically go straight up in this parabolic run of money creation. And the reason why I want to show you this chart, and the reason why I think it's so important, is because as we look at these numbers, 8.5% inflation right here, 11% PPI. Inflation is not prices going up. That's not inflation. Prices going up are the result of inflation. What inflation is this chart right here, the money supply. It's like a balloon. We inflate the air, the volume of air in a balloon. We inflate the money supply. When we inflate the money supply, then it causes all these distortions in the market, like prices going up. So prices going up are the result of that. Another thing I want to show you real quickly, I had prepared this, and this is in CPI. It's a manipulated number. They talk about core CPI. So core CPI takes out food and it takes out energy. Of course, the two things that you need, right? You'll cut out everything in life, but you need food, obviously. You need energy. You're still going to need to keep your food cold in your refrigerator at home, and you're still going to need lights at your house. And so they'll take those out. They want to blame that on the war. But again, I want to show you this chart. I used it the other day. You might have seen it. This cross that I have right here, this is showing the price of oil was staying flat. See how flat the price of oil was. This cross right here is when Biden was elected president in November, not took office, but elected. And the reason why is the market started to price that in. You can see the price of oil taking off like crazy. all the way to this point where this cross is right here. This cross right here is when the invasion, the Russia-Ukraine war took off. And what we can see here, if I zoom in a little bit better, is you can see that the price of oil took off, but it's come back down. And the price of oil is almost back down to where it was pre-invasion. So when they're telling you that because of the invasion is the reason why your gas is so expensive, don't believe that part. The other thing I want to show you real quickly is that the price of monthly rent, you can see here. I used this the other day. If you saw it, I'll go through it really quickly. But rents are up 56% in Long Beach, 50% in Chandler, Arizona. On one bedrooms, if we go to two bedrooms, Fresno's up 71%. Huntington Beach is up 55%. And the reason why I bring that up is because CPI, a big chunk of that basket is shelter, right? Homes. And they have only forecast about a 5% increase, which I don't understand where they got a 5% increase, because per this rent.com here, they show that the national average increase was 25%. So that means that CPI number is really more upwards of about 15% at a minimum, if not closer to 20%. So some interesting stuff. So what comes next? Well, this goes back to this article that I said. We're in a state of disequilibrium. The markets are all jacked up. The Fed's lagresse, as they call it. They've printed so much money, the markets are in disarray because it's messed up the pricing mechanism. So this is what's caused all the problems. Now, there's no magic wand to fix this. There's no like just going back to normal. And now we have to get through this process. And at the same time as we're going through this process of trying to get all of this money, this glut of money that's pumped in the system, we're also witnessing the financial system dying right before our very eyes and a brand new financial system being born. This is a key piece that I've been hitting on over and over. I'm going to hit on this and then we'll go ahead and jump into some questions. But basically what we've witnessed is our system, the current financial system that we have today, that was really set up in about, 1944 was the Bretton Woods Agreement. And so the financial system that we have today is really from about the 40s. If you want, go back to 1913 when we got kind of the Federal Reserve System set up. So the financial system that we have today is about 100 years old. So think about the telephone system. So we had a telephone, we had wires. If you're old enough to remember, we had pay phones in your house. You had a wired phone, and all across the United States, we had phone tower, phone poles, and wires ran across the country, and everything was wired up. Today, we use wireless phones, right? Mobile phones. But we started with the wired phones, and then the internet grew pretty quickly because it used the wires from the phone system. Think about that. The phone system, the network, the phone network. But then countries like Africa, for example, leapfrogged past that. They never had the entire continent or country wired up with a phone network. Instead, they went straight to a wireless system. They leapfrogged where we were. We're still in a financial network. The dollar network, the Federal Reserve Treasury system, is 100 years old. The globe is still using a 100-year-old payment network, financial network. However, we've just witnessed the death of that network, meaning we've kicked Russia out of that. We've kicked Iran out of that. Now they're working on their own financial system. Now, every country in the world is saying, hey, we don't want to trust our money in that network because they could block our phone call. They could seize our money at any given time. There was an article that came out yesterday on Zero Hedge that one of the largest oil companies in China has said they're pulling out of American markets because they're afraid their bank accounts would get seized. So who could trust their money in this financial network when they know that the United States and their buddies could take that money whenever they want? And of course, the answer is they wouldn't. And so what we're going to see is that we're going to see other countries leapfrog past this current financial network that we have now, just like countries leapt past the telephone network, and they'll set up new financial networks on new rails. The financial system is being rewritten right before our very eyes. And if you don't understand it, you're going to get left behind. All right. That's kind of what I want to talk about. Let's jump into some Q&A and see what happens. Let's see here. Let me see if I can get into some questions here. If you see any good questions, Dan, you want to grab them, just put them up on the screen. We can do that. If you see anything good.
Not really many questions.
Any? lot of comments. All right. I see I see Mac Jabberwock says family in Lebanon are living a future we want to avoid right now. Lost 90% of their money. Now looking at food shortages. No joke. Took 2 years to lose 30% and then to go from 30% to 90%. Yeah, that's how fast it happens. It's one of those things, as I've been saying over and over, it's like gradually and then suddenly. And so you want to make that move before it's too late, not after. Otherwise, it's too late for that to happen. Um, I see Dr. Mata says 550-gallon gas cash in Sacramento. Um, yeah, well, in California, it's up to 750. All right, here we got a question up here. I see M. Batista. How can we monetize what's happening? Well, it's not about, I don't know. I don't know if I would say, how do you monetize that? I don't know if that's the right word. I guess the question might be, how would you take advantage or how would you profit from what's happening? Might be a better way to look at that. And so the answer would be to play that trend, right? So, for example, there's lots of trends that are happening right now. Energy being one of them, for example, right? So, hang on, let's see. So, for example, energy crisis, right? So, natural gas is up 1,000% throughout Europe. Oil's up. Obviously, I showed you the chart of oil as well. Do you believe that oil, natural gas, uranium will go up more in the future or less? So let's see, supply and demand. So if the globalists want to shut natural gas and shut oil down, then we'll have less supply. Do you think the demand goes away? My answer, no, we're still going to need oil, right? And so we're going to have a supply and demand disequilibrium per the point of this call, this video. And so I expect prices to go higher. So that's one way. I've been in oil, natural gas, and uranium plays for about a year now, and I expect that to do very well. So that's one way you would do that. The other way would be, for example, the dollar system that we have is failing. So I don't want to be in bonds or treasury bonds or things like that. That's falling. What I would want to do is move into another system. Obviously, if you're watching this video, I'm sure you're aware at this point that I'm a big believer in Bitcoin being the future. And so I might not want to hold the old treasury assets. Instead, I might want to hold the new Bitcoin assets. That's another way to play it. Of course, gold as well. I think gold's going to be a big beneficiary. We see the central banks of the world are buying and accumulating gold, massive amounts of gold. And so I like to also hold gold as well. What else we got? Jason says Fed equals inflation, then deflation, then deflation, then blah blah. How quickly you forget. Yeah, I mean that's absolutely right. That's exactly what happens. It's what Ludwig von Mises from the Austrian School of Economics calls the crack up boom, and he says. Then suddenly the people wake up and realize that inflation is both persistent and intentional. And so it's as the Fed increases the monetary supply, it increases economic activity. Everyone's borrowing money, everyone's spending money, and things blow up. And then they go, oh, things are going too hot. Let's suck the money back out of the system, which then crashes everything back down. And so they pump it up, they crash it back down. They pump it up and they crash it back down. And you and I, we're at the whim of what the Federal Reserve does and when they decide to put that money in. It's insane. All right. Let's see what else we got. Mark Moss, do you have an inflation estimate for the year end? Well, some of that depends. So, what do I mean by that? Well, they're having emergency meetings about how they can change the CPI basket. And so they want to change the way they calculate that number. And if they do that, then of course, I would expect that number to be manipulated down. That's obviously their goal. Assuming they don't do that, then I would expect the CPI number to continue going higher. I think over the next couple of months, I wouldn't be surprised to see it hitting 15%. And the reason why I say that is because they measure inflation year over year. Actually, let me share my screen here again for a second, and I'll show you another chart that I had tweeted. yesterday, day before. It's right here, as a matter of fact. So if we look at this chart right here, don't believe the food prices have peaked narrative. They measure prices year over year. So in this chart, we can see that April, May, and June were abnormally low last year. And so what does that mean? Well, that means when they measure prices in May and June for 2022, April, May, June 22, they'll measure them from where they were a year ago, which were abnormally low, as you can see from this chart. And so the year over year growth is going to be abnormally high. And so I think we might be able to see, we might pass 15% this summer. So you asked me for my prediction. I have it right here on my Twitter right here. That's where I think things could go. Let's see, what other questions we got? York, PA says, I've acquired some Bitcoin and gold. In your opinion, do you think foreign real estate, such what George Gammon acquires, might be a wise consideration? I certainly do. I also acquire foreign real estate. As a matter of fact, I'm currently building a house down in Mexico as we speak. I was just in, that's in one part of Mexico. I was in another part of Mexico recently, looking at more real estate as well. So I do look at that. I think that's definitely something that people should consider. It's a big question. So I think the vision that I have for the world is that we're moving from centralization to decentralization. The internet obviously is leading that. And so what happens is we've, over the last 100 years, if you want to be successful, you had to move to the United States, and not just the United States, you had to move to a city like New York or Chicago or Los Angeles. However, what we're seeing now is people can move to Wyoming or Idaho or Colorado because they can work remotely on their computer. Well, if they can move to, the middle of nowhere, Idaho, Wyoming, Colorado, etc., why not move to Latvia or Indonesia or Bali or Mexico or whatever? And so I think over the next 100 years, we're going to continue to see people spread out all around the world. I think people will start to cluster in key areas. And so, it depends on what you're looking for in real estate, but I think like some of the key areas like Brazil, for example, they've been severely undervalued. But I think we might see an abnormal amount of people start flocking to these little enclaves to work. And so I think those could be really, really good opportunities if you can navigate that. All right. What are the questions we got? I wanted to try to bring on a few people and see if we could try and do this. I've never done it before. Like bring somebody on live. So if we want to try that, if anybody has any questions, that is, maybe the questions are a little bit slow, which is a little bit strange because usually I'm so overrun with questions. But Dan, if we want to put the link up, we'll give this a shot. If anybody would like to jump on and talk to me live, I want to try that out. All Nighter Hider says BTC will do better than a CBDC because of who controls each of those. Do you want to control your private property or not? All right. I see. All right, so it looks like Dan just put the link in there in the chat. So if anybody wants to jump in, you can click on that link. He'll talk to you in the back office, and if you have a good connection and a good question, we'll bring you up for that. I see Baptized is saying, "Hey, Mark jumped on. I'm big on gold and silver. What are your thoughts? I don't like the stock market much." Well, as I said, I think gold and silver, particularly gold, is a good investment. Silver is a little bit of a speculation, in my opinion. What do I mean by that? Well, gold's been money for 5,000 years. There's a fundamental reason why gold is doing good. There's a need for gold. So, for example, per Basel III, all the banks, the central banks are required to hold gold for their reserves. And so we've seen over the last several years that central banks have been net buyers of gold. They're accumulating massive amounts of gold because gold is money. Silver's not. Silver's not money. Sorry to break it to you. Silver was demonetized. So all throughout history, gold was like the big store of value. Silver was for velocity, was easier to trade, easier to exchange. However, we got a new technology that was called paper gold certificates. And so that took the place of silver. Silver was demonetized in the late 1800s, and silver's not money. So people buy silver today speculatively, thinking that at some point it will catch back up to gold in the gold to silver ratio, which has historically been about 15 to 1. I don't think that it comes back. Um, and so I do like gold. I think there's a possibility, probably a small possibility, but I think there's a small possibility, dare I say, gold might outperform gold in the short run. And the reason why I'd say that is because depending on what happens with Putin and Russia, if they continue to demand gold and gold as payment for their energy, for their oil and gas, we could see um, gold get revalued real quick. And when the currency crashes, I don't say if, I say when. It's only a matter of when. At some point, the central banks are going to have to do something to instill confidence in that currency. Their only real chance is probably going to gold. And so there is a small chance we could see it get revalued. I say a small chance, but I do like gold. I think it's going to do pretty good. Um, Funny Boy is asking, does Elon Musk trying to buy Twitter change the world? Well, I don't know if it changes the world. I think it's interesting. I think it's a combination of what I like to talk about, which is politics, finance, and technology. So it's politics. It's talking about censorship and free speech. And should Elon Musk do this? It's finance. Does he have the money to do this? And what happens with the stock price? And it's technology. Of course, it's a Twitter platform. I think it's very interesting. I think that Twitter was started with a promise of being a free speech platform. They're anything but free speech at this point, especially since Jack Dorsey stepped down. And so they've continued to get more and more censorship happy, if you'll call it that. Elon Musk has been a big opponent of that. He's been talking about that consistently. And so, I think it's interesting he'll try and buy it. I think it's crazy that a billionaire is so rich he could just wake up one day and decide to spend 47 billion or 54 billion or whatever it is on Twitter. I, for one, I guess I'm championing it. I mean, if he wants to buy it, buy it. I think it could be better than what it is now. I don't think it could be being worse. I hate to say that because things could always get worse, but we'll see what happens. I also do want to say, by the way, I would love to meet each and every one of you on the other side of this camera. I'm going to be honest with you. It gets lonely talking to this camera all the time and not seeing who's on the other side of this. So I'd love to see you in person. Next month, I'm going to be live and in person in Dallas, marketdisruptorslive.com. There's a link down below. I got a bunch of my good friends that you probably are familiar with, like George Gammon, like Joe Brown from Heresy Financial. Of course, the big names like Luke Grauman, Danielle DiMartino Booth, Robert Breedlove, Harry Dent, on and on and on. There's a whole list, about 15 of the top experts that are going to answer what they think is going to happen over the next couple of years, and most importantly, what you should be doing about it. Come hang out with us live and in person. Hang out in the lounge with us. We even have a big dinner. You can come hang out with the speakers at the dinner. I'd love to meet you. I'd love to introduce you to my friends. I'd love to see you. So check that out, marketdisruptorslive.com. Let's see this question here. Hard-headed says, wouldn't special drawing rights be the same fiat Ponzi scheme with new makeup on it? I see that question. Hard-headed. So what are the special drawing rights, SDRs? So the IMF creates a basket of fiat currencies, and in that basket, they have different percentages. So the US dollar makes up the biggest percentage of that SDR basket. And to your point, yes, it's sort of the same thing. It's a basket of fiat currencies. So yeah, fiat currencies are nothing, and so is an SDR basket. What's interesting is this whole war with Russia and the changing financial system that we have today. The United States, and not just the United States, but the financial system that we have, went after Russia so hard. Not only did they steal their money in their FX reserves accounts, their foreign exchange reserves, but they even took their SDR. So I think, I've thought that they're trying to move from this, dollar system into like this SDR system, which I think is to your question here. But they just killed that too. So I don't see how any nation is going to trust their FX reserve system or the SDR system either. So it's pretty interesting. Um, Lamart Glenn says, Mark Moss, will CBDCs be a continuation of the same debt-based system? Yes, of course, right? So they're going to create central bank digital currencies from thin air. It's going to be from thin air. So having nothing, no real monetary value, they'll be able to create as many CBDCs as they want. And so, of course, yes, it'll be very similar in a sense where there's made up of nothing, no backing, but even worse, if you can imagine that, because on top of just being printed from nothing, having no economic value, being able to create an unlimited amount of them, on top of all that, as bad as that is, it's also the ultimate form of surveillance tech. So what does that mean? It means that you don't actually have money. You don't have money you have in your wallet or money you can put under your briefcase. I'm sorry, under your bed. What you have is you have credits on the government's ledger. Now, you've probably heard me say, if you watch my videos, you've heard me say I've been talking about recently that without freedom of payments, there is no freedom. Well, I listened to Yomi Parks. She's, I don't know if you know who she is. She's kind of been on a speaking tour. She's famously had escaped from North Korea, one of the most, communist dictatorship countries in the world. And she said it backwards, and it really made me pause. And I've been thinking about it for about a week now. She said, without freedom, there's no need for money. So in North Korea, they don't need money because there's no freedom. The state gives you what you need. They give you your ration of rice, your ration of sugar, and that's all you have. You don't need money. And so back to a CBDC is sort of like that. You don't need money. The government issues you credits, and you use those credits for whatever they want you to. No more smoking cigars, no more having alcohol, no more food after 2 a.m., whatever it may be. They issue you credits. You can use the credits on what they approve. And that's it. There's really no money. And so that's kind of what that is. We got anybody coming in the back office, Dan?
Yes, we do. Let's get Darren Reed up here.
All right. We got someone coming up. Let's do it. We've never done this before. So wish me luck. Here we go. Hey, look at that. Darren.
Hey.
What's happening?
Mark Moss, #1. I hope you're not getting too much feedback here, brother.
All right. We got someone coming up. Let's do it. We've never done this before. So wish me luck. Here we go. Hey, look at that. Darren. Yeah, I got you. Go ahead and ask your question.
Mark Moss, #1. I hope you're not getting too much feedback here, brother.
All right. We got someone coming up. Let's do it. We've never done this before. So wish me luck. Here we go. Hey, look at that. Darren. Yeah, I got you. Go ahead and ask your question.
Mark Moss, #1. I hope you're not getting too much feedback.
Dan, what's going on? All I hear is a loop over and over, Dan. What was going on with that?
I don't know.
Okay, well, I guess that's not working. Technical difficulties. Shoot. Can we try it again, Dan?
Sure.
All I hear is a loop over and over, Dan. You're back. What question you got for me?
Testing. 1, 2, 3. You got me, Mark?
Okay, well, I guess. Yep, I got you. Difficulties. Shoot. Can we try it again, Dan? All I hear is a loop over and over, Dan. You're back. What question you got for me?
Testing. 1, 2, 3. You got me, Mark?
Okay, well, I guess. Yep, I got you. All right, Dan, kill that.
He's messing with her.
What's that? All right, I guess we're going to have to do some more testing on that. We tried to do something cool, but I do use headphones. I got headphones in. I see someone saying I should use headphones. I guess we're going to have to do some more testing on that. Sorry about that. Do you want to try one more, Dan? Or no?
I got one just audio if you'd like to try. Let's see here.
You know what? Maybe. All right.
Technical difficulties.
I'm just going to keep going through these questions here then. Yeah, I think that was the guest that we had on. It wasn't on my end. All right, let's see what else we got here. Mac Jabberwock says, Mark, I hold Bitcoin, hold physical gold, own my house outright. I don't know what to do with, I'm not going to say how much, your wealth managed mutual funds. Bank guy says hold, of course. Of course he says hold. Do you know why he says that? Because he gets a percentage of the amount of money that he's managing for you. So if you take your money away from him, he doesn't make money. Financial managers, wealth managers, they're not incentivized to do good for you. I mean, they make a management fee, plus they make a percentage of the upside. But if you take your money away, they don't make any money. So to them, it's always hold, always hold. I don't know what they have it in, so I can't say if it's good or bad. So I can't really comment on that. He could have it in a bunch of bonds, and I would say it's probably really bad, or he could have it a bunch of the best energy picks there are in the world, and it might be really good, and I don't know. And it sounds like you probably don't either. So the first step I would do is try to figure out what the heck is inside there and figure out if you like that breakdown or not. All right. Augustin Valenzuela says, yeah, dollar is in trouble, but not out of the game. Yeah, you're absolutely right. As a matter of fact, I do believe the dollar will probably be the last game in town. It's the cleanest shirt in a pile of dirty laundry, as we call it, right? So the dollar is not out of the game. So the dollar is gaining strength against other currencies. However, it's losing strength against real things. Remember, money is not wealth. If I had, I've used this example a bunch of times. If I was on a deserted island, I had a briefcase with $1 billion of cash, $1 billion of gold, and $1 billion of Bitcoin. It's all worthless if I don't have goods and services, real things to buy with it. And so it doesn't matter if the dollar's gaining or losing strength to other fiat currencies. What we care about is it gaining or losing strength to real things. And so the dollar may be gaining strength to other currencies, as to your point it is, but it's losing strength to commodities, oil, gas, uranium, gold, Bitcoin, etc., homes, etc. Stephen Kugel says, why would a government allow Bitcoin against a CBDC? What use is Bitcoin in a country that bans it versus CBDC? So, Stephen Kugel, I just got back from the Bitcoin conference. I was there for 8 days in Miami, Florida last week. There was many lawmakers, not just from the United States, but dignitaries from all over the world. As a matter of fact, the probability of the United States banning Bitcoin is very low, extremely low. And even if they did, and again, it's very low in my opinion, even if they did, how well has that worked out for like the prohibition? Did it work for keeping alcohol out of the country? No. How well does that work for drugs? Do they keep drugs out of the country? They can't even keep drugs out of the prison. And drugs have to be grown and cultivated and packaged and processed and shipped and smuggled and distributed. They're going to stop something completely digital? I don't think so. So the other thing is that when the government tells you that you shouldn't do drugs, it doesn't make you want to go do them. But if they tell you that you don't have the right to hold your wealth in a way that we can't steal from you, then it kind of makes you want to. So in my opinion, the chance of that happening is very low. And even if they tried, it wouldn't work. Alexander of Selinko, do you think the dollar might be backed by Bitcoin? No, there's no reason to. Why would you have a dollar backed by Bitcoin when you can already transact Bitcoin faster, cheaper, and more private than you can a dollar bill? So I just don't see any reason why you would do that. Kyler Brown says, what are the best 3 investments to make right now? Acquiring some more cash for investing soon. Well, I don't, best, what is best? Best is a relative word, right? What's best for me is not best for you. I don't know what's in your portfolio. If I was starting from scratch and I had a bunch of money, I would probably say, one, I would want to establish cash flow. Cash flow for me is always king. So I'd want some sort of investments that pay me cash flow. Assuming I already had enough cash flow to meet or exceed my living expenses, then I might look at some other things. So obviously Bitcoin is going to be one of those. And then I'd probably be in the energy sector, something around commodities. Commodities or energy is where I'd look.
Would you like to take an audio question from Jughead? We've heard him before.
I guess we can try it. Sure.
Let's give it a try.
Hey, hello, Mark. How you doing, bro?
Yeah. What's up, man? What's up, Jughead?
Yeah, bro. Yeah, I'm coming from the UK. Welcome to you and the guys in the chat room. Keep it short and sweet, bro. We appreciate
what's
your
you got?
work, man. Yeah, we appreciate your work. I really appreciate your fantastic insights are very invaluable. We appreciate it. One question, bro. Last week, I made a point about silver. I'm buying silver since last year. Coin ingots. What's your view, bro, on silver as a store value? I know gold is always excellent, but silver, I mean, you know, you're the expert, hence why I'm calling you. What's up, bro? I mean,
Yeah, man. Sure, Jughead. Thanks for that question. I kind of answered this already, but I'll say it again. So, throughout history, gold has been money, right? Silver has also been money, and silver was used with gold because what happens is, and this is a very important point to understand the new financial system. So, check this out. So, gold has been this good store of value. The problem is something called velocity of money, and you hear the the Fed and everybody talk about this velocity of money problem. And so, because gold is big and slow and heavy and clunky, hard to move, it doesn't have enough velocity. It's hard to move, right? So then they use silver. Silver was used for smaller, lighter transactions, and it made the velocity, it made money move faster. Well, what happened is in the late 1800s, we had a new technology, and it was called layer 2 technology. So gold was that base settlement layer, and they created paper gold certificates. So then I could put my gold in the bank, and then they gave me paper gold certificates that was a claim on gold, and that gave it more velocity. It was easy to move that paper gold certificates. When that happened, there was no need for silver anymore. Silver was demonetized. So silver isn't needed anymore. Now, 80% of silver is used for manufacturing. So there's still a use for case for silver. So it's still used for solar panels and electronics and stuff like that. But gold has a monetary premium. So central banks are buying gold. I have a fundamental reason to buy gold. If at some point the central banks have to revalue the currencies with gold, gold could go up 10, 20, 50x. But why would silver go up? There's no reason.
Yeah.
Silver would go up if the manufacturing use case went up for it, but they use such small amounts. I don't see that. And so most people are buying silver for speculation. And so because gold and silver has always had this 15-to-1 ratio, they think at some point it will get back to that. In my opinion, it won't. So I think it's good as a speculation, but as like an investment, there's no fundamental reason for it to go up.
Okay, cheers, bro. That's fantastic, Mark. I mean, I'll bring up from there, bro. I'll call next week. Thanks, bro. Take care.
All right, thanks.
All right, yeah.
All right.
All right, we have a Stephanie.
All right. Before I take Stephanie's question, I want to bring attention to my screen real quick. I want to just let you know again. Here on my screen, Dan, you can see I want to just bring your attention, marketdisruptorslive.com. We're going to be here next week. Next month. Live event. You're going to leave with a financial strategy in place, accelerate your wealth, bulletproof your assets, turn assets into income, take control of your financial future. We got workshops on how to create cash flow. I have a bunch of some of my favorite investors and teachers in the space. Luke Grauman, I mean, he's absolutely been nailing what's happening. Daniel DiMartino Booth, literally a Fed insider. Harry Dent, the father of cycles. I've learned so much from him. George Gammon, everybody's favorite macro addict. Jeff Booth, Greg Foss, on and on and on. Go to marketdisruptorslive.com if you want to hang out with me and check that out. All right, let's go ahead and just jump back into the question. Who do we got? What's up, Stephanie? Stephanie?
Stephanie is muted.
Oh, she's failing me. All right. Well, let's try someone else. All right. Let's see. What else we got? TG says, Mark, in your experience, what kind of family real estate do you recommend as you accumulate wealth? Single family or multifamily? Thoughts? I mean, there's pros and cons to both. It just depends. As an investor of real estate, we typically call single family homes like the bread and butter. That's like typically the most part of your portfolio. I like single family homes, more entry level homes, but I also like multifamily. They're different. So single family homes are easier. They're cheaper to acquire. I can get conventional financing for them, lower down payments. That's better. I like entry level because there's always people falling down and there's always people rising up. There's always demand there. Multifamily is better, but if I go over 4 units, now it's a commercial loan. I have to put higher down payments. I have different loan terms, higher interest rates, things like that. It's a little bit better because now I have diversification. Instead of having one place that goes empty, now if I have, say, a 12-unit building, one goes empty, there's still 11 units paying me. So there's differences. There's pros and cons. It really comes down to the deal's in the deal. And so it really comes down to the deal. Where is it? How much can I make? What's my return? How new is the building? What's my expected cash flows? Things like that. Narwhal Taco says, any thoughts on the idea that the Fed can't put a viable CBDC together fast enough, so they're going to capture an existing stablecoin? Yeah, that's actually something that I've been saying for quite a while. Jughead put in $10. Appreciate that, bro. Appreciate the $10 tip. If you want your question answered, that's the best way to get it answered. Just throw a tip in there because they pop out to me real quick and I see that tip, and we'll make sure to answer every single question or comment that we see with a tip. So I appreciate that, Jughead. You're a boss. Back to the question that I was answering. Can the Fed get a CBDC out fast enough? So the Fed's pretty incompetent. When they tried to launch the Obamacare website, which was basically a shopping engine to shop my insurance plans, they couldn't even get that done. They finally got it launched. They spent, I think it was like $2 billion and it didn't even work. That was a simple website. The IRS has been trying to update their website for 40 years. 40 years they've been trying to update it. And earlier this year, they announced that they're going to scrap the whole overhaul plan. They're going to fix just a couple core pieces, and they don't expect to have that done until 2030. 2030. I mean, so they're going to launch a CBDC. I just don't see how their competence will allow them to do that. So to the question, I would agree that there are better chances to co-opt a CBDC that's already running. There's lots of US dollar stablecoins. I think that there's a chance that the US government doesn't really need to put out a central bank digital currency. And the reason why is because we already have dozens and dozens of US dollar stablecoins. US dollars are already technically a cryptocurrency, right? They're already a stable coin. And so the majority of cryptocurrency stablecoins are already US dollars anyway. So we'll see what happens with that. If you want to get your questions answered, make sure to throw a tip in down below because it pops up really big for us like Jughead did. Appreciate that. If there's any other questions, Dan, feel free to let me know.
I got someone that listens to you while they drive in the car. Would you like to take a question from them?
If they can talk, if they got good audio.
Hey, Mark, what's going on?
Hey, man, don't be looking at me while you're driving. What's up,
no,
man? What's
I'm
your name?
stopped right now. Hey, my name's Ed. I met you the first time, I think it was George Gamma's birthday, or it might have been the other time in Phoenix.
Okay.
But, yeah, I remember meeting you out there. Hell of a guy. You and George both. Really stand-up guys.
Well, hopefully you're coming to Dallas. We're both going to be in Dallas. George will be there speaking. I'll be there as well. So marketdisruptorslive.com. Check it out. What question you got?
I didn't really have a question. I just wanted to stop and say hi, and good to see you again. I'm enjoying the broadcast, but I'm driving, so I really can't spend too much time on here.
I got it. Well, I appreciate you calling in, man. That's cool that you did that. Good seeing you.
Yep. Talk to you later.
Okay, bye. Anthony Pretlow says, how is Biden responsible for inflation when the entire world is experiencing it too? Yeah, Anthony, to your point, I mean, Biden isn't necessarily responsible for inflation. I mean, he partly is, and that's partly because in his administration, he's pushed through a few $1 trillion spending bills. So to that point, he is. But however, Trump also pushed through $1 trillion spending bills. So Trump is as well. As a matter of fact, every single president in history has spent more than the last. And so Obama before him and Bush before him, et cetera. And so Biden is responsible for it at that point. But to your point, central banks around the world are also printing massive amounts of money. Now, part of the reason why inflation is so bad across the world. So, for example, right now, like Peru is erupting with protests. And that's because when the United States prints money, we offshore all that inflation to these other nations. And so we cause problems for the rest of the world. But to your point, it's not 100% Biden's fault. Trump also spent a bunch of money and Obama before him and et cetera. Dr. Mata says, good broadcast, better than TV. Cool, cool. Thank you. Oh, here we go. I see we got a Rizzy got $5 in. Thanks, Rizky. Question: can CBDCs be programmed to expire to increase the monetary velocity or be spent only in certain sectors or companies? Yes, 100%. So they're programmable money. So we could say, hey, we'll give you this money. If you don't spend it by Friday, you lose it, for example. So it's programmable. As I kind of made the case before, like say the government says, hey, smoking cigars isn't safe anymore. So now you can't use it to buy cigars anymore. Hey, nothing good happens over after midnight. So now you can't spend money after midnight, for example, right? It could also be like behavioral. So for example, hey, Rizky, you're not saving enough money, so I'm going to give you a positive interest rate if you save money. Hey, Mark, you're saving too much money. Now you have a negative interest rate. So it can do all those things, but it's programmable. It's behavioral modification. It can definitely do that. It will be the biggest, like I said, surveillance technology, that the weapon that the state has ever had, which is exactly why they want to put that in place, of course. GH says, what's up with the war against proof of work? So for those of you that don't know, proof of work is the consensus mechanism that Bitcoin uses. From a philosophical level, proof of work, everything in life of proof of work. Your muscles, if you go to the gym and lift weights, your muscles are proof of you doing the work. If you have a business, that's proof of you doing work. If you do yard work all day, all weekend, and clean up your yard, and you stand back and admire that, that's proof of you're doing the work. What the establishment wants is they want something for nothing, right? They want to print a bunch of money and go buy up a bunch of assets. That's called proof of stake. And so the other consensus mechanism that all the other cryptocurrencies run on are called proof of stake. And what that means is that you don't have to do any work. You don't have to expend any money. And you can just get the benefit of just staking without having to do the work. They hate it because philosophically they want it something for nothing, but they really hate it because they can't control it. So proof of stake, they can control. Whoever stakes the most coins gets the most say in the network, sort of like the Federal Reserve. With Bitcoin, doesn't matter how much you own. Michael Saylor, he owns a big amount. He gets no more say in the network than I do with nothing, right? So they want something they can control. They can't control proof of work. That's why they hate it so much. Yosef says, do you ever entertain it all fails? And that's part of the plan. BTC, fiat, decentralization, destroy everything, then capture. Yeah, 100%, right? So Klaus Schwab, the World Economic Forum, wrote a book called The Great Reset. So they're pushing something called Build Back Better, right? So what does that imply? Build Back Better. Well, that it implies that it gets destroyed or torn down first if you're building it back. So to your point, that means that it has to be destroyed in order to build it back. It needs to be reset. So how can we get rid of all this debt, the system that's broken, that we can't move forward with it? So let's destroy it and then build it back. So 100%, yes, for sure. Anybody else that want to come on and talk? Anybody else want to come on and talk? Maybe throw the link back in there. Peace on Earth says a lot of states currently limit the hours and days where people can buy alcohol, so the pattern is long established for their mentality. Yeah, sure enough, it is, right? What do regulators want to do? They want to regulate, right? Cult Leader says, what's your opinion on the coming food shortages? Well, interesting enough, here in Southern California at Trader Joe's, my wife went to the store the other day and said, man, there was hardly any selection. There was no food. So it's happening. It's happening really fast. I run a mastermind group. So I have a small private group I call my Inside Line. We had our monthly meeting yesterday, and I brought on an expert that's running farms and regenerative farming here in the United States. And we talked about this, and he said that there's this big glut of cows that are being processed right now. But once we get through this big glut of cows, there's nothing on the other side. Trying to get enough meat from a good, reputable farm to put in a freezer right now is very difficult. On top of that, we have a problem with the chickens. And the chickens, there's like this Bavarian bird flu going around, and they're going farm to farm, and they're doing like PCR tests on these chickens. And PCR tests have this high fail rate or false positive rate. And they're just slaughtering whole like farms of chickens. And so we have a massive, beef shortage, chicken shortage coming. On top of that, the USDA just went and said that we have like a record shortage of wheat this year. So we're having a record wheat crop this year. That's just in the United States. Obviously, globally, it's another situation. Russia and Ukraine are responsible for 30% of the global wheat. So we have massive amounts of food shortages coming. Now, unfortunately, you can't just wave a magic wand and make it better. When you miss a spring plant, there's no fall harvest. That means you have to wait till the next spring and then the next fall to harvest it. So you don't just wave a magic wand. That's a year and a half, 2 years. What the central banks of the world are finding out very quickly, unfortunately, painfully, is that they can print money, but they can't print commodities. They can't print more oil, more gas. They can't print more food. And that's reality smacking them in the face right now. We got anybody else want to come in, Dan?
I got a question about gold.
All right.
Hey, hi.
What's happening?
Hi, Mark.
Hi.
Yeah, I'm good. So, Mark, I recently started following you and watched all your videos. So, I have a simple question for you. I want to start investing in gold, but my confusion is in which form of gold do I invest in? Physical, digital, or through ETFs, or mutual funds?
Okay, so great question. So you want to invest in gold, and what type of gold should you invest into? So
Just say option.
yeah, so the options that you typically have would be physical gold. So that's gold that you can hold in your hand, you can hold in your safe, hold at your house, etc. Other options would be some sort of a gold derivative. So you can buy it through a fund like an ETF, or you can also buy like a gold miner. So like companies that produce gold. So that's the three ways that I'd look at it. So gold that I hold in my hand, first of all. So a lot of people say, if I don't own it, if I don't hold it, then I don't have it. And that's true. But like, do you imagine some like end of the world Mad Max scenario where the whole world breaks down and I have to use gold to buy things? The probability of that happening is probably pretty low. And even if that did happen, I'd probably rather have like bullets or batteries or something like that instead. So the amount of physical gold that I hold is probably pretty small in relation to gold. I like to buy, I don't really buy any gold in funds because all that does is give you exposure to the price of gold. But of course, those funds don't really have any gold. I do like gold miners, so like this gold mining stocks, because they're a way to play a leveraged play on gold. So for example, if gold goes from 2,000 to 2,500 bucks an ounce, that's 500 bucks an ounce. But if I'm a gold mining company with 100 million ounces in the ground, that's $500 times 100 million ounces. That's a lot of money. And so I typically go from a little bit of gold, physical, that might be of my gold allocation, that might be 15, 20% of my gold allocation. And the rest I'll probably split around with like gold miners to play the trend, not so much the actual physical gold piece itself. Hopefully that helps. Thanks for the question.
Thanks a lot. That helps a lot. Yeah.
All right.
That will be all. Thank you.
Thank you. All right. Well, I don't see a lot more questions coming in, so I think we'll go ahead and probably get this thing winding down. I appreciate everybody jumping on and hanging out. I do want to just mention one more time, marketdisruptorslive.com. There's a link down below in the description. Come hang out with me in person. There's a chance to hang out in the lounge with me and the speakers. We have a dinner. You can come to dinner with us one night. Everybody's favorite, George Gamron. I got Joe Brown from Heresy Financial, Luke Grauman, Harry Dent, Daniel DiMartino Bruce, Jeff Booth, Greg Foss, Robert Breedlove, so many others. Love to see you there. MarketDisruptorsLive.com. We're going to be together next month. Like I said, it's lonely talking to the camera all the time. I'd love to see you face to face. So try and make it out to that. MarketDisruptorsLive.com. And shoot, I guess with that, we'll go ahead and sign it off. Dan, let's go ahead and sign up to your success. I'm out.